Good evening, guys. It's Saturday, July 23rd. My name is Dave Coker, and this is, of course, Talking About Finance, where we just talk about finance. Remember, driven by content from a Telegram channel, about 45, maybe 50 of my buddies, many from the old days and many current buddies from the new days, all working in banking. Wall Street, City of London, Singapore, global crowd. We just bounce stuff and talk about finance all the time on this Telegram channel. So let's start out this evening by looking at the S&P 500. We're going to look at the past week, and my gosh, I see green. My gosh, green is good. And every time when I say that, or many times when I say it, somebody talks about, oh, it's a color of greed. Well, I'll tell you something, guys. The night is young. So I am going to pitch our shared belief to those of you who listen every week and try to catch a specific ethos of the market from those of us who love to play in this playground. Greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies. Greed cuts through and captures the essence of the evolutionary spirit. Greed in all of its forms. Greed for life, greed for money, greed for love, greed for knowledge has marked and driven mankind upward. So never badmouth greed. We're all here to make money. And last week the market delivered. Almost all sectors did well. Only healthcare lagged. I'm not sure what's up there, but I suspect sector rotation. There's no real specific news that I could see that came out, so it's all good. The S&P 500 was up about 2.6% on the week. Now it's down only about 16.9% year to date. So a rather nice push up. The VIX traded down slightly, closed the week at 2303. It opened at 24.3. No big moves, and I don't know, it's a little worrisome, a little concerning. I'd like to see some formal capitulation. Big sell-off, the VIX going to 40, 45. Not sure what's going on here now, but I will take what I can get. I love to see green in the market. This is fine. The 10-year note closed down this week at 277, up 1.3% year to date. Curious it's below 3%. It's almost like the bond market's signaling rate hikes are really going to stop soon. They're not going to continue. We'll have to see how that plays out. Oil closed the week down at closed at 94.63. It's down about 3% week on week, up about 25.8% year to date. We're still not sure why we're seeing oil prices drop. Remember, Mr. Biden did engineer a coordinated release from the Strategic Petroleum Reserves. That might have something to do with it. What I suspect is really going on is oil is relatively high, gasoline is very high, and a lot of Americans, I think, just anecdotally from talking to friends still in the States, they ain't driving so much. So demand falling, what do you expect will happen to the price? So I just want you all to know what I'm doing. And this is going to shock you, but I am so fixed in my ways. Yesterday I bought Bitcoin. I grabbed some Ripple the night before. Dividends are being paid. They're almost all here for the month. There's going to be a big push on the last day of the month, and then I'll use these funds to buy more dividend-paying stocks. Guys, that's the secret formula to getting rich in the markets. Forget trading. You can't trade. Retail can't trade. Professionals can trade, but they're not using their own money. And that's the big distinction. So don't trade. Buy dividend-paying, cash flow generating assets and get rich slowly. And again, I'm getting DMs. And, I'm not going to out people. If they want to DM me, they'll say, although there's a couple of them were a little weird about it, right? Why am I still buying stocks? I want to reiterate. Yes, I'm still buying stocks. Yes, I'm still buying Bitcoin. Yes, I'm still buying Ripple. What are we supposed to do with our money? Pay it all out in taxes? I don't think so. It doesn't work that way with me. In the words of Leona Helmsley, taxes are for the little people. I work on my taxes every month about half an hour to reduce, legally, to reduce taxes. I'm going to invest. I'm going to maximize my post-tax income so I can save and invest. And it's because of an old Scottish expression that I learned on one of my many trips north when I was working for a credit ratings agency. Money is flat because it's meant to be piled high. And guys, I'm stacking it. Are you? Here's an interesting one. Russia. God, the Western media full of dire predictions about Russia. And look at this, interest rates dropping down to below what they were before the invasion. And the GDP is going to contract roughly 4 to 6%, not from what they forecast earlier, between 8 to 10%. So is the war working? I don't think so. And I maintained many times we should be over there talking to these people instead of seizing assets of private citizens. Wait until Russia starts to do that to Americans. That'll be a different experience, I bet. Now, here's an interesting one as well. We were talking about this. IMF put out this report. I can't remember the name of the report it came in, but I'm sure you can find it if you just Google it. And my God, and I do have the report. My apologies, guys. This is a very, it's not the purpose to recount a 140-page report on this video. We're just talking about things that really excite us and capture our interest. And boy, the debt captured my interest. Because I live debt-free. I ain't got no debt. Credit cards, they're essentially debit cards. I pay them off every month at the end of the month. I just don't like debt. I do have an extensive property portfolio. I pay cash. Property we live in, no debt. I just don't like debt. But look at this debt. My God, it's absolutely amazing. Up to 256%. This really, really large increase in debt. Absolutely incredible overall. It's not really clear how this is going to end. I do tend to believe in the Great Reset. And many, many more people are starting to believe in it. The Western democracies will definitely do something like that. It's important because we have to understand what's going on in the economies, and people are miserable. Now, I do track University of Michigan consumer sentiment very closely in the States, and this came out last week, and of course I grabbed it and put it on some research, the research that I sell banks. And remember, guys, any of these charts where you see yellow, coco.me, blah, 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 it's stuff that I sell banks, and there's typically about 1,000 words. I'm not really sure. I'd have to look at the charts. But there's many, many words that go in and talk about this, and there's many other charts. But you're getting this one, and this has really caught my eye, because you look going back over a 5-year period, I baselined it at 100. My God, it's dropped significantly. Everybody's miserable. Well, except me. I'm always happy, right? But if you go onto Fred, and Fred's a wonderful resource, you should try it. If you go onto Fred and take the same chart, these same series, I should say, and go back to 73, you'll see we're at record lows in terms of confidence of consumers in both the US and the EU. And that tells you something. We know that interest rates are rising. Fed funds are increasing. Take a look at the right-hand side. You can see where Fed funds are. You see the havoc it's wreaked in the markets so far. And sometimes people ask me, when will it end? How much higher can they go? Well, check it out. Look back here in the 80s. Look at where they went in the 80s. We have to pay for that period over there on the left-hand side called low rates. They were artificially low for too long. I used to keep a great deal of cash in the bank. And when rates cratered, when they went effectively to zero, I thought, my God, I'm not going to get messed over with my money, because banks don't lend money out at zero, but they're paying you zero essentially. So I started building up the property business very, very quickly. Now, they justified that. They said because of the global financial crisis, they, quote, had, unquote, to do it. I call rubbish. I think that's garbage. It was politically expedient at that time. And it's important you pay attention to Fed funds, because here what I've done is I've taken a look at Fed funds, the blue line. I have taken a look at initial claims for unemployment in the States. We're seeing roughly a 47% increase in a little more than 20 weeks. Fed funds rising? Yep, that's exactly what happens. It's not specifically correlated. Unemployment lags, but yeah, unemployment's going to kick up. It's going to go higher. It'll be really fascinating to see this. And we look at other indicators in the markets that I tend to look at, with, again, through my research. One thing I like to look at is retail inventories. I look at those divided by sales. And my gosh, of course, the Corona crash right there in 2020, Corona COVID crisis, I should say. Yeah, ignore that. But take a look at how it's spiked up. Look at the change. Oh, yeah. People just aren't buying stuff. The research report that this went out in was called survival spending. People now are spending money not on stuff, not on home furniture and electronics and appliances. They're spending it on food, gas, energy. It's called survival spending. And that really got good feedback from my clients. They really liked that one as well. Still, We know that markets tend to look 6 to maybe 18 months, maybe 1 year out. Here's an interesting thought, guys. What I did was I went back 1 year and I baselined the Dow 30, the S&P 500, and QQQ, which is a proxy for tech stocks. Yeah, and look at this. They bottomed back there in early June, but now they're bouncing up. So was that a bottom? Boy, I don't know. Of course, I'm eternally optimistic, so yeah, I hope so. Oh, guys, and this is a good one, right? We're talking about Bitcoin, of course, and this is really fascinating when we talk about this. This guy, Bitcoin Quotes, I'm not sure who's running it. Oh, actually, Jeff Booth was quoted there. Says, everything will fall in price against Bitcoin forever. Remember, Bitcoin is designed to be deflationary. Key takeaway that you should know, by the way, is that Bitcoin, we know that 19 million Bitcoin have been minted. And there will only be 21 million Bitcoin, but 19 million have been minted. Really wild stuff. Do you have Bitcoin? You probably should. And once again, we're going to close off by talking about Plan B. And Plan B, of course, the Dutch guy who did the stock to flow model, he postulates there's two different people holding Bitcoin presently. There's people who bought from 2009 to 2020, and they're in profit, average price of roughly $8,000. They account for over 60% of all Bitcoins being held. And then the remainder, somewhat less than 40%, are the people that started to buy. They discovered Bitcoin in 2020, 2022, 2021, 2022. And they started to buy. Well, they bought at an average cost of $43,000. And yeah, it seems they're sitting in a loss right now. But keep the faith. I buy Bitcoin every Friday. I bought Bitcoin yesterday. I'll buy Bitcoin next week. Every Friday, I buy Bitcoin. Doesn't matter whether you buy it once a week, once a month, once a quarter. It's called dollar cost averaging, and it works. All right, guys, that's it for this week. It's been wonderful chatting with you. Go forth and make some money. Take care.